All right, we saw more records on Wall Street yesterday. The Russell 2000 setting its fourth straight record close. It added another 6 points, 29 records this year. Investors have favored the small cap stocks since March because they're less affected by global trade disputes. But what will happen to the small caps when those trade disputes are resolved? We asked Lindsey Bell, CFRA investment strategist, and she joins us now. Lindsey, good morning.
Good morning.
Thanks for waking up early with us. So we have a deal with Mexico. We're optimistic about a trade deal with Canada. Has the tide turned for small caps?
You know what? I don't think so. I do think that the big issue in the room is China. So as that trade issue continues to play out and will be a concern moving forward once we get past this NAFTA and good news out of Mexico and Canada, investors' focus will turn to that. And I think that for that reason, investors will still continue to flock to the small cap, the Russell 2000, the S&P 600. And beyond that, I just don't think the story is over for these stocks. Growth in the S&P 600 is projected to be 33% in 2018 versus 22% for the S&P 500. So the story's not over.
The story's not over, but how high can these stocks go? Because when you chart the S&P 500, which is up 9%, I believe, year to date, and you chart the Russell 2000, it's doing significantly better. How high can it go?
Yeah, you know what, though? You look at valuations. Right now, the S&P 600 is trading at about 20 times. All of 2017, that index traded at 21.5 times. And if you look out to 2019 numbers, it's trading at 18 times. That's a significant discount to its historical average. So I do think that the market is pricing in the potential for this index to not continue to do as well as or for momentum to lag in the next year. But if you, like I said, going back to those earnings numbers, if you look at 2019 earnings growth, 22% for the S&P 600 in 2019. That compares to 10% for the S&P 500. So in the S&P 500, numbers are being cut by 50% when you look out to next year. But for the S&P 600, the smaller cap index, they're only being reduced by about 35%. So that is really strong growth. And you're not going to be able to find that in many other places.
Any specific names that you like?
You know, we don't have specific names that I can mention personally, but I would say that some of the sectors that are doing well in the large cap space will continue to do well in the small cap space, like the tech sector. Also, you might want to look at some of the financials. Those have really been on fire in the last couple weeks and months, and they could continue to do well, especially as we get past some of these trade issues.
Do you think that the small caps are maybe feeling some of the euphoria out there? The public might not necessarily be feeling it, but investors tell you, look, things are really good. We still are riding this wave of deregulation and the tax cut. Do you think the small caps are feeling that or seeing something that some of the multinationals or the public's not seeing?
Yes, exactly. And I think that's why these stocks will continue to do well. Small business optimism in its most recent reading, which was its July reading, was the best in its 45-year history. Yeah. Small businesses are feeling very good about the environment in which they're operating in. The consumer is feeling good. We heard this week that consumer sentiment, or consumer confidence, reached a very high level, 133. We haven't seen that in 18 years. Consumers are spending. We saw that in the second quarter. They're just feeling confident. They're spending. They have more money in their pockets, and that will continue. Like I said, and we've talked about on this show many times, the economy here in the U.S. is strong. It's firing on all cylinders, and that's just going to benefit the small caps.
And those small businesses, they're the largest employers in the U.S. Lindsey, thank you very much.
You got it.